Welcome from Indianapolis. I am Derwin Smiley, and this is the Derwin Smiley Show. I am glad you are with me, and the show starts right now. Michael Schiele is a financial advisor at Morgan Stanley. Mr. Schiele, welcome to the show.
Thank you, Derwin. Appreciate it.
Tell me a little bit about yourself.
Sure. So I spent my first 10 years in the Army as a U.S. Army Airborne Ranger at the 82nd Airborne Division. So I had a good bit of time just out in the woods, so to speak. Then I went into corporate sales for about 9 years. Worked with two companies, one of which was Lilly and Company. And then got into financial services in 2010, and really it was a calling, to be quite honest. I felt the need to go into that industry for the sake of my family.
Tell me about what you learned in the military.
Sure.
How you bring those skills to where you are now at Morgan Stanley.
Well, one of the things that you learn as a Ranger is to never take anything for granted in planning. And so every obstacle, every potential threat must be identified, categorized, and then a plan must be put in place to deal with that obstacle. And it's the same thing that I do now in financial planning. I don't take anything for granted. So what I do is I look at any potential threats or obstacles to you reaching your financial objective. We put a plan in place. At no point do we just assume everything's going to be okay.
I know with the economy bouncing back now, how can we make our money work for us?
Well, I think one of the most important things in making your money work for you is understanding your tolerance for risk. You know, how much volatility can you handle? Can you handle your stock or seeing your portfolio go way up and then go way down and then come back up? So once you understand what your tolerance for risk is, then you can determine the type of investment vehicles that you want to use. There are some investment vehicles that have a lot of volatility, have a lot of inherent risk, and then others that are less risky. So it really depends on how comfortable you are with the market fluctuations.
What does it mean to diversify your portfolio?
That's a great question. Diversification is simply having the use of different asset classes that will respond differently to the same market conditions. So if you have what we call defensive stocks, that means when markets are going down, these stocks, these assets don't go down as much. Then you can have offensive type of stocks. That means when markets are going up and business cycles are up, they tend to outperform the overall index. Having a good diversification puts you kind of in the center. So if you think of a roller coaster, this would be more like an escalator.
Okay. So what does the future hold for stocks?
Oh, that's a really good question, and I'm not an economist, but I would say that if you look over the 20-year, 40-year history of the stock market, it has always gone up. So you look at long-term values, long-term investing, 20 years plus. I'm not going to say it's safe to say, but you can say that the expectation is that you will see an overall increase in stock market valuations.
What if you don't have that much money?
You're
just making ends meet, paycheck to paycheck. So how can you make your money work for you then?
Well, there's opportunities out there to invest in mutual funds, $50 a month. And if you get paid twice a month, then that's $25 out of the first week paycheck, and then $25 out of your third week paycheck. So first and 15th, 25 and 25, $50 a month, you can be an investor. It doesn't take that much to start an investment portfolio.
Give me some success stories since you have been working at Morgan Stanley.
You know, I'm going to share one with you that I think is pretty unique. One of the things that I've made a standard for my practice is that you have an emergency fund. If you are a regular retail investor, a brokerage, and you're just going to have a brokerage account and you're just going to invest for a particular event outside of a retirement account, it is for you to work with me, you have to have an emergency fund. And so I had a couple come to me. They did not have an emergency fund, but they had plenty of cash flow to invest. And they wanted to invest about $1,000 a month. It's not bad. But before they could do that, they first had to start their emergency fund. So as things would have it, their work situation had changed. And when their work situation changed, they had that money set aside. So they did not have to stop their investing. They didn't have to dip into their 401k. Because I had forced them to start an emergency fund, it allowed them to be disciplined investors. And I tell all my clients this: you cannot be a disciplined investor if you're not first a disciplined saver. And so that's the first step. So for me, that's a huge success. Performance gains in your portfolio, honestly, if the markets are doing well, like right now, everyone's going to do well. There's no real differentiation. It's when things go poorly, it's how well have you positioned your clients to weather the storm. And I think for me, that's something that was really exciting.
I know I have to take a break, but when we come back from break, I want to talk about how do you survive if everything crashes.
Sure.
All right, here's Mr. Michael Schiele. Stay with us. As we was going to break, I threw a question out there to you. What if the market crashes like the Great Depression?
Yeah.
What does one do then?
All right, so you're throwing some heavyweight questions out there. You're not taking it easy on me.
Have to be a realist. Have to be a realist.
All right, so there's a couple of things there. Number one, the word is liquidity. Do you have, going back to that emergency fund, so if you are a single person, you should have 3 to 6 months of your utility expenses, and that utility to include mortgage. 3 to 6 months. If you're a married couple, then I would say 6 to 12 months. And depending on the type of work that you do, maybe you need a full year or more set aside in your emergency fund. That way, if everything just goes to pot, you experience a job transition, your portfolio was down and you're not able to take income from your portfolio, you have this money in cash in reserve. And to be very honest, this is one of the challenges that African Americans have had, is not having enough money in savings. So if you have money in savings, it allows you to weather the storm. Now, part of weathering that storm, just like in 2007 through 2009, when the stock market went down to its lowest point in March 9 of 2009, it rebounded back, and it rebounded back quite considerably. So if you're able to hold on during that time period because you have some liquidity, you have money in savings, then you can literally ride that storm out, because when the market rebounded, it's much higher now. It was, I think 677 is what the S&P 500 was, and we're now around 1,800. So that's more than double. But you have to be able to survive that down period. And the only way to do that is to have money in the bank.
So what does the future hold for individuals who say, I'm living paycheck to paycheck, so how can I save? So
the first thing that individual has to do is get a real picture of their cash flow. So what's coming in versus what's going out. And until they really understand the amount of money they've got going into their checking account or bank account, or however they have it set, and what's going out, they can't make any adjustments. You can feel like you need to make a change, but you don't know exactly how much to change or what to change. So I think the first thing you got to do is get a real understanding of your cash flow. Then when you understand what that is, if it's a negative situation, well, then clearly you got to make a change. Either you make more money, so more money is coming in, or you spend less money. And you have to figure out, if you're going to spend less money, where is it I'm going to spend less money? Once you establish some sort of margin, so now you know that you've got more coming in than you have going out, that's the money you begin to save with, and then that becomes the money you begin to invest with.
So tell me, for individuals who say, I want to purchase a home,
yeah,
what steps should they be taking to make sure that everything goes smoothly?
Typically now, after the housing crisis, 10% down and no money down is just about gone. And so if you're going to purchase a home mortgage, you're going to need to make about 20% down. So the mortgage companies want to see that you too have skin in the game. Zero down may not fly, to be very honest. Then you also want to get, I would say, a conventional mortgage, which means a 30-year fix. Nothing that's going to the balloon mortgages or interest-only mortgages that have some sort of increased payment at the end, a balloon payment at the end. You don't want to put yourself in a situation where you don't understand what's going to happen with your mortgage, and that's where we lost a lot of wealth. 95, the gap between black wealth and white wealth was $95,000 in 2007, and then it went up 22 times in 2012. A lot of that had to do with the housing crisis. So when you look at a person's net worth, a lot of that net worth comes from the value of their home. Well, when the homes went upside down, so did the net worth of a lot of African Americans. So you don't buy too much house.
Live beneath your means.
Live beneath your means. Do what your grandmama taught you, you know? So what you make, understand what it is that you earn, understand then what it is that you need to keep so that you can pay your bills, and then you invest the rest. You save and invest, and for those who, like me, grew up in the church, tithe, pay God His money.
Most definitely.
then you save, then you invest.
Tell me about college funds for kids.
There's several ways to fund college, and you can just do that outright, pay for it in cash. Obviously, there's loans out there that the government has that you can take advantage of, school loans you can take advantage of. And then there's a 529, and the 529 has been called like a 401k for education. You can use a college choice 529 here in the state of Indiana, and you do get a state tax credit for using a 529. So, and that's up to 20% of a $5,000 contribution, which means you can get a $1,000 tax credit for contributing $5,000 to an Indiana 529 college choice plan. And it's a great way to save for school. You just start early, and early is 4 years old.
Okay.
That's early.
Okay. He is Mr. Mike Schiele, financial advisor for Morgan Stanley. Mr. Schiele, thanks for coming on.
It was a pleasure.
Yes, sir. Stay with us. Mr. Shaun Hawkins is not a stranger to the Derwin Smiley Show. Mr. Hawkins, my friend,
Mr. Smiley.
Welcome back.
Thanks for having me.
First, let me congratulate you on your new position, Vice President of New Ventures. Tell me what you've been doing with yourself.
Derwin, I've been literally flying all over the world. So I have responsibility for all of Lilly's venture capital and private equity investing. So we have a couple of in-house funds, if you will, venture capital funds, one based here in Indianapolis, the other one based in Shanghai in China. And so just working with those teams of smart individuals keeping me busy. And then we have funds that are not necessarily Lilly folks managing the funds. That are based in Boston and Montreal and Europe and New York. And so we've done a really good job over the last, let's say, year and a half, setting up these relationships that allow us to get closer to where innovation is happening in science, and doing so through a venture investing framework. So, look, I'm having a lot of fun doing it. It's a lot of responsibility, but I couldn't be happier to be doing this for Lilly.
Tell me your background. How does your background fit? Because I know the first time you was on the show, you was an entrepreneur, those type of things.
Right.
So let's talk. Tell me about your skills that can have you transition into this new position.
So, you know, actually coming back or coming into this new ventures role is actually a bit of a homecoming, because it's deal making and it's transactions. It's within the organization, within finance, really where I started my career. So it's not that, you know, dissimilar to what I was doing before I moved into diversity. Diversity was actually a bit of the wild card in there from a career perspective, but I had a fantastic time doing that role. We made a lot of progress in diversity. I learned a lot. I grew a lot in the role. But essentially what I've done is just transition back. So as you mentioned, I've been an entrepreneur. I've run a sales organization. I've done licensing and business development transactions. I've done equity investments over the period of, let's say, almost 20 years. So right now I'm just coming back and I'm leading a broad organization or teams of organizations to help Lilly in our external innovation efforts.
So Lilly is more than just focusing on the pharmaceutical side of the business. Tell me how Lilly is trying to take over the world, man.
So I wouldn't characterize it as trying to take over the world, but Lilly's a broad company. So we have an animal health business. Even within pharmaceuticals, we're multifaceted. So we have a diabetes franchise. We have an oncology franchise. We have a rich history in neuroscience and autoimmune disorders and a whole host of disease states. But what we're trying to do with our funds, what we describe as our capital funds and our venture capital investing, is to a bit punch over our weight. So you have Lilly based in the Midwest, competing with some very major companies on the East Coast and in Europe, a lot larger than us, generate more sales, more cash. But if we make strategic investments, and this is what we're doing with our fund investing, we're getting closer to the sources of innovation, we're getting closer to innovators, we're getting closer to where the drugs are coming or the next ideas for innovation are coming out of academia. And through that, we're getting certain strategic rights. And so as drugs mature outside of Lilly's portfolio, Lilly has some proximity and perspective on what those drugs could be. And as they reach maturity and they become more and more exciting, risk has been displaced and value has been created, then Lilly can use the richness of our balance sheet, or the cash on our balance sheet to acquire some of those drugs or those compounds and then put them in our portfolio. And so it's a very creative way in which to say we don't have to own all of the innovation out there. What we need to do is get close to as much of it as possible, and then through some of our cash investments, obtain sort of early rights to those investments.
I want to piggyback on something that I deal with in my business also, closing deals.
Oh, right.
And how important is, how long it takes to make that friendship. I think you said it worked over a year just to get close to it. Talk about how important that is to have a relationship with potential investors.
You know, it's key because when we think about our venture investing, right, it's going to be us, other investors around the table. You're going to have a long relationship. Some of these funds, you know, the life cycle for the funds are at a minimum 10 years, and they can go out to 12, 15 years. So what you need to be able to do with those folks around the table is, one, trust them and they need to trust you. And it takes a while to develop that rapport and those type of relationships. And then they also have to understand you can add value, right? So, you know, you're not looking at transactions as a zero-sum game and where you're saying, okay, there's 100% of value to get. I need to get as much of that as possible. What you actually need to do is say, what do they need? What do we need? And as much as possible, even though it's cliche, create win-win scenarios. And then that way you have a relationship, that way you have a partnership going forward in which both parties can maximize the value. Now, when it comes to the technical aspects of a deal, the legal aspects and you know, negotiating term sheets and contracts, you know, the cycle time takes what it is, right? So, and it's best to go in up front with all of those details spelled out as much as possible so that when you're on the back end, you're not guessing or wondering what the intent was when you first walked in. So we try to, you know, basically outline everything we can up front, and that just takes time.
Tell me, how do you deal with crises now?
Well, you know, the first rule when it comes to a crisis is don't panic, right? and you know, we joke around with kids and other folks when we say that, but it's actually true. So what you need to do is step back, and many times what seems like a crisis situation, if you step back and pause, take a little bit of time to think about, you know, what are your options, a lot of times whatever that tornado was or whatever that storm was will blow over. But if you do take that time to step back, you can weigh all your options, right? Because if you are impulsive and you react very quickly without thinking about all of your options, you can actually go down the wrong path. And so what I generally like to do is pause, and when it's the most chaotic, when it's the most stressful, that's when I like to slow down the most, and then you know, make a decision and then implement from there.
I think you said when it's at the most chaotic, that's when you like to slow down the most. I think that's everybody. Here's Mr. Shaun Hawkins, Vice President of New Ventures at Eli Lilly. Stay with us. I thank you for staying with us. We will now continue our conversation with Mr. Shaun Hawkins, the new Vice President of New Ventures at Eli Lilly and Company. Before we went to break, I wanted to talk to you about your achievements so far in this new position.
You know, so Derwin, me and the team, we've had a handful of achievements. We've been able to close new relationships and funds in New York. We're embarking upon one right now in the United Kingdom. But what I'm probably, most proud about is, we actually repurpose some Lilly assets that were not being developed, and we're exploring them with the help of some world experts in the field of hearing loss. And so if you think about it, hearing loss affects millions of people. Right now, there's no medicinal treatment for hearing loss. It's really hearing aids. And this is a potential solution to where folks can participate in conversations, they can re-engage with family and loved ones in the conversations that are meaningful, that are holidays or whatnot, and do so without the stigma of a device hanging on the ear. And so we created this company. Lilly invested. We licensed the compounds to the company. We have an ownership stake, and it's some of the coolest technology that's out there. And so when you hear about folks talk about disruptive medicine and disruptive innovation, we hope that this one proves out to be something that really benefits patients.
You killing husbands, man. I don't want my wife to see this. Because I think she thinks I'm losing my hearing, but I'm just trying. But tell me about what you miss in the field of diversity.
The biggest thing I miss is working with my team and working with our employee resource groups. So I had a fantastic team in diversity. I told you about that the last time I was here. They really provided a lot of the brains and the horsepower around all of our initiatives. And so I had a great team. They're being led by a phenomenal individual in Monique Hunt McWilliams, who's our new Chief Diversity Officer, who I believe you had on the show. Yes. She's outstanding, incredibly sharp, and she's going to take diversity to another level, and we all know it. But I missed that, and there were a handful of things that I was working on in diversity that I think could have helped make a difference that I didn't get to see over the finish line. But Monique has picked those up, added a few more to her basket, and she's going to continue to advance diversity at Lilly. And so we're in good hands. Monique and I meet regularly, and she provides me really good counsel. So
tell me, what does the future hold for the new ventures department?
Derwin, I think it's really around the following. What we're trying to do is add strategic value to Lilly, and not just provide Lilly with financial returns. So what we're doing is leveraging cash to put nice returns back into our bank accounts, if you will, but also give Lilly access to the next breakthrough treatments in cancer and Alzheimer's, diabetes. And so what we're doing now is bringing a little bit more harmony to our financial investing and put it on more of a pace with our discovery research, so that when we have investments outside of the walls of Lilly, they're moving along at a pace that mirrors where we may have gaps in our internal pipeline. And so now you actually have a nice synergy between what we're doing financially and what needs to be done from a scientific standpoint, instead of having things mutually exclusive.
I think we have like a minute or two. Talk about being able to move up the corporate ladder at Eli Lilly.
I've been blessed, and a lot of it is about timing. A lot of it is actually performing, and really, when I talk to people about how to move up and how to advance an organization, at the end of the day, you always have to provide good performance. Like that is a given. If you don't deliver good performance, it's hard to do all the networking and all the other things to cover for lack of solid performance. And then after that, what you have to do is actually have exposure. So people need to have exposure to your thought processes. They need to have exposure to your work product. They need to have exposure to deliverables that you've put into the organization. And then after that, you need to network, right? So people need to know you. When you're not in the room, folks need to bring your name up. And it needs to be in a positive fashion. And they need to just talk. They need to be able to talk about your work product, not just he or she is a nice, guy or girl. They need to really be able to say, this person started with a white sheet of paper, came up with this idea, saw it through to implementation. This individual found out a way to save us 20% on our manufacturing costs. Those are the type of things that people need to be exposed to and speak on your behalf. So if you combine the performance with the exposure to the networking, then you increase your likelihood of moving up in an organization. And then the final piece is sometimes you have to ask for it. And don't talk about things kind of in an esoteric fashion. You specifically talk about what job do you want, what role are you looking for, and you give your HR and your leadership insight into 2 or 3 areas in which you'd like to go and at what level. Don't just say I want to be a VP one day. Say I want to be a VP of this or this or this, and here are my skills. And here's my work product to support why I can do that. And if you can do that and demystify that, then you increase your likelihood of making it up in any organization.
I want to piggyback on something else when you said about networking, closing deals, how Lilly brings that added value. What does that mean?
Lilly, especially when you think about deals, so we can provide money, but a lot of folks can provide money. And in the world we invest, right, it's not just, it's not Wall Street stuff, it's not, textiles or anything like that. We invest in life sciences, right? So biotechnology, chemical pharmaceuticals, animal health. And so when Lilly invests, we actually have several thousand scientists that we can bring those capabilities, those insights to bear in any investment. And so when we talk about smart money, Lilly is smart money. And so I can put an investment down, and if someone needs to know, well, what's the best approach for this mechanism of action for an Alzheimer's drug, you know what, I can pick up the phone and find somebody at Lilly that can give you some insight. And so when we close that deal, we can provide that. Plus we also have a development engine. And so we use a group called Chorus, which is our virtual drug development group, with many of our fund partners. And Chorus develops drugs at roughly half the cost of industry prices to do the same type of drug development, and we do so in a time frame that's a lot faster. And so we can bring those capabilities, those drug development capabilities, in a pharmaceutical quality fashion to bear in addition to the cash.
So how do you deal with stress?
Derwin, that's actually a good question, my man. I just kind of keep picking them up and put them down, right? I just think about the objective ahead of me. There's always a lot going on. I've seen a lot in my life, so it's really hard, to kind of get me worked up about something. But I just say, look, what am I focused on? If I'm in a stressful situation because someone is being, disrespectful or whatnot, and I say, okay, if I react this way, how is this going to get in the way of what I'm ultimately looking for, right? And in the deal world, if I'm looking to get a deal done, what I need to do is deflect, get everybody back focused on what the bigger issue is at hand, and then move to what I need there. If it's a workload or whatnot, to be honest, that means I stay up at night. That means I work on the weekends. That means I work on airplanes to get what I need done. And then I try to spend some time with family. I try to get some exercise in and whatnot to try to decompress. And then I talk to good people like you to make me laugh and put everything back in perspective. You know what I'm saying? And and then the final piece, which I should say is the first piece, I'm a faith-based person, right? And so, I pray, I go to church and really try to get centered, with my God.
He is Mr. Shaun Hawkins, the new Vice President of New Ventures at Eli Lilly and Company. Mr. Hawkins, it's always an honor to have you on the show. You're welcome to come back anytime.
All right, Derwin.
That's our show for this evening. Remember, you can follow us on the World Wide Web at thederwinsmiley.com. And remember, my sole purpose is to inspire the greatness in you. I'll see you next time.